Good evening, traders and investors. Will back here with another one, coming to you with a Monday market recap. Hopefully you guys had a very good weekend, and hopefully you had a very nice start to the week as well. And in today's markets, the S&P and the QQQ pushing a little bit higher. No new all-time highs, but the markets were looking fairly healthy today. We did not have any major news catalysts for the day, but we know that there are some volatility events on the near-term horizon, and those are going to be the following. Of course, we have to take a look at the Wednesday producer price inflation metrics, and then on Thursday, we get the same thing, however, for the consumer side. Now, these are two things that might throw a bit of a wrench in the rate cut narrative, but as of right now, especially after Friday's somewhat weak jobs report, the rate cut narrative is well underway, and that is largely what the markets are moving on today. Now, if we take a look at the probabilities for rate cuts, we still stand at about 89.4% for a 0.25% cut coming into the September 17th meeting, and thereafter, traders are also pricing in another interest rate cut for the month of October, and one final one in the month of December. So in the most recent week, because of the jobs data, we've went from 2 possible rate cuts now to 3, and that's really why the markets are rallying. We have yields coming down, and we have a bit of a rotation back into some of the growth themes because, of course, those are some of the best beneficiaries of the rate cuts. So as of today, no news, just very normal price action, and we had a lot of names and a lot of sectors pushing to the upside. So in today's video, guys, we're going to take a look at a few things together. Number one, we'll be going over a full technical analysis of our major market sectors, take a look at the SPY, the QQQ, and a lot of our major sectors, check on that rotation, which as of right now is still fairly healthy. Then we're going to do the same thing. We will go through technical analysis across the big tech list names right here and derive, are there any short-term trade opportunities on this list, or maybe are there some long-term positions that we can possibly be exploring as well. After that, we will do a quick little rundown of our biggest gainers and losers of the day, of which we had many to the downside, but also we had a couple big ones to the upside, some throughout the day, and then some after the close. Two very big pieces of news that were stock specific today was number one, Elon Musk's SpaceX spending $17 billion to acquire Spectrum license from EchoStar. Now, this resulted in a few key players coming down in a big way throughout the day. Some were able to get the dip bought up, such as ASTS, big drop early morning, but then recovered thereafter. Rocket Lab as well was affected by that piece of news, was down a lot in the pre-market, but closed the day fairly green. And then you had a couple communication services players such as T-Mobile and such as Verizon, which were down on that news. And piece of news number two, which sent some names skyrocketing the after hours, was this one right here. Nebius signing a $17.4 billion AI infrastructure deal with none other than Microsoft. I'll remind you, Microsoft is also CoreWeave's biggest client. So in the after hours, NVIS right now is up over 40%. Unfortunately, you can't see it right here. But if I turn on the after hours trading, there's the massive candle after the news, 45% to the upside. And even other names in the space, such as CoreWeave, was up another 5% in the after hours after having a pretty good day there. And then lastly, pretty much, we also had another one, IREN, Iris Energy, which also came up in the after hours, roughly, let's call it about another 10%. So looking pretty good there across the data center infrastructure renting plays after that Microsoft news. So we'll take a look at a few of those key components at the end of the video. And lastly, we'll take a look at my portfolio to see which positions I have started off today and some Friday, which I didn't update you guys about, but also which ones I'm keeping into the rest of the week, and also which positions I still have for the long term too. So that should be it for today's video, guys. Let's jump right into the action, shall we? The S&P was up 0.25% today. The Q's up 0.49%. Very strong day across the board. If you take a look at the heat map right here, not much was kind of left behind in terms of the big tech names. Only Apple, Google, and Meta slightly soft on the day. Shout out to Tesla as well. But really, we were led by a great day on Amazon, Microsoft, NVIDIA, even Broadcom continuing after its beautiful earnings last Thursday, and even some of the other names such as Oracle, which has earnings tomorrow, Palantir, some of the software names were performing quite well today. In financials, fairly mixed day. Healthcare also fairly mixed day, although both of those sectors did make their way into the green. And then the bottom half of the market, surprisingly, not performing the best, even though yields have been plummeting over the course of the past 2 days. Friday was a good day for some of these names, but today unfortunately was not. So we had some rotation back into a lot of the big tech names, a lot of the high, fast-paced growth names as well on the high tickers throughout the day. But overall, not the worst day in terms of market breadth. Take a look at the one-day relative here. You can see that even better. Technology, materials, cyclicals, and financials leading to the upside. And to the downside, sadly, some of the more interest rate sensitive names not really cooperating with the direction of yields today. Utilities, real estate, and healthcare sadly making their way to the downside. On the one-week relative, we still stand pretty favorable in terms of rotation. Communication services, which I'll remind you is largely a byproduct of Google, Netflix, and Meta having good performance over the past few days. Consumer cyclicals, materials, and technology. Healthcare as well, defensives as well. To the downside, sadly, energy, utilities, and financials. Financials, still a probably good spot to be in the midst of all these rate cuts as well. I will remind you as well, we don't really have much in terms of earnings this week. The biggest day is probably going to be tomorrow with Oracle earnings. We'll cover that together on the channel. And then another big one, shout out to Adobe on the Thursday close. So that as well as part of the software names, it's going to be an interesting one to take a look at overall. But as I said, not much in terms of news today. The biggest days of the week will be indeed Wednesday and Thursday. Quick little inflation check leading into those inflation prints. Trueflation, which is my favorite inflation gauge. It measures over 50 million different products, 30 million different data points. So you could argue that it's probably more accurate than the CPI and PPI, which are limited baskets of goods, of course. This one is updated daily, and as you can see right here, it's currently at about 2% or slightly under 2%. So even though the headline number for CPI this week might come in a little bit more hot than expected, a lot of that is due to some of the sticky services inflation, namely in the housing sector, surprisingly, because we know housing has been weak. It's just that the prices just haven't come down as quickly as some of your goods components on that metric overall. So although the headline print for CPI and PPI might be a little bit hotter than people are anticipating, I like to pay attention here to Trueflation. It gives us a better sense of where we currently stand in the markets, just to get a better sense of whether or not, if the markets are red come those days, does the narrative hold weight, or should we be buying the dip? Essentially, we probably should be buying the dip. So we'll take you guys through those reports as they come in at the midpoint throughout the week. So in terms of our technical analysis, guys, let's jump right into it because we have no news to cover whatsoever. So we'll just be doing a very brief rundown of who is still in control of these markets. And at a first glance, guys, it truly still is the bulls, right? The S&P looking very strong in terms of our price action. Daily uptrend, full bull control right now. And any dips throughout the week, whether that's because of PPI, CPI, a combination of both, you're going to be looking for a higher low. The line in the sand still stands down here at about 635. This level was tested twice over the past few weeks, but the bears were not able to convert this into a downtrend. So those line in the sand levels, 634, but it's part of the overall, slight support area. Call it between 639 down to 635. Still just looking for higher lows for possible continuation of the uptrend. Now, we also know that the month of September is supposed to be one of the more negative months. As you can see from this chart, we traditionally have a decent start to the month of September before unraveling towards the end. We will see if that statistical analysis or probability analysis actually holds true. You can see the month of September here, 1.16% to the downside is normally the consensus read for the month of September. At least it has been since 1928 all the way through this chart, which is 2009. Sorry, I don't have an updated version, but you remember last week, I'll bring it back tomorrow, but last week we were kind of saying whether you measure on a 50-year basis, a 25-year basis, or the last 10 years, the month of September has been one of the worst months for the market. Not starting off that way, but we know we could expect some possible further volatility. So just keep in mind, if you do get that volatility, who remains in control? And it is indeed still your bulls. The weekly higher lows are still established down here at about 619. So the bulls have a lot of space to work with in the event we don't set new all-time highs and we go into consolidation. We're just still looking for weekly higher lows. So it will be a great opportunity to buy the dip on some of our favorite companies, because we know, although sentiment can be temporary, what really drives the earnings what really drives the market in the long term are corporate earnings, or is corporate earnings rather. So in the last earnings cycle, I'll remind you, 80% of all companies in the S&P reported positive revenue beats. 80% of those same companies reported positive EPS beats, and the guidance for the end of the year was still quite good, and that is considering all the macro impacts of the potential tariffs. Moving on to the QQQs right now. Qs having a good day. A lot of big tech was net higher today, 0.49% to the upside. So daily uptrend recaptured by the bulls. I'll remind you, we were paying very close attention to the possible setup for the head and shoulders pattern, and the bulls just said no. They're actually moving a little bit higher, setting a new daily uptrend in the process. So they retain full control. Line in the sand is still down here at about 559. Those are your daily higher lows, but also your most recent area of support, 561 down to about 554. As long as we do not lose that, you can still say the bulls are in full control, and any dips will just be looking for higher lows for possible further trend continuation. On the weekly time frames, we are still looking quite good, but you can clearly tell, guys, this whole area is the one that you should be watching out for in the event we come lower than this because of CPI, PPI, or anything in between in terms of macro. Well, just remember who's in control of the largest timeframes of them all, and that is, of course, the monthly bull. So in the event that September proves to be what people say it's supposed to be, a red month, and into October as well, just keep an eye out for 540 down about 515. That'll be a retest of a beautiful location of monthly support. That'll be about a pullback of, let's say, 6, 7, 8% on the Qs. Tons of your favorite names would probably come into very desirable buy areas. And then in the event that it does happen, I'll take you guys through it as well. And you'll probably see me picking up a few shares of my favorite tech companies too. But as of right now, the bulls remain in full control. On to the XLF financials right now. They had a big down day on the Friday session, trying to recover as best as they can. No new all-time highs, but sadly new lows. So a bit of a daily downtrend right here. First time that that's happened in roughly the past month and a half of trading. Whenever you guys see a daily downtrend, the first thought should always be to zoom out one time frame to ascertain what exactly is going on right here. And as we can see, we are just trying to set up a beautiful weekly higher low for the bulls right now. So it's been a very nice weekly uptrend overall. Just looking for a bit of a higher low. So pay attention to some of your favorite names in financials for some of the buy the dip opportunities that might be coming over the next few days, few weeks. My favorite one probably is Visa. Visa down here, 340 all the way down to about 330. This little pocket, phenomenal area to be building some positions on Visa. I like this one a lot. It's been support for the stock for the past 6, 7 months at this point in time. So instead of looking for banks on the pullbacks, which could also be a decent trade, Bank of America, looking at JP Morgan as well for some possible extended pullbacks. My favorite name across the batch here probably has to be Visa, so keep that in mind. Moving on to XLV Healthcare. Healthcare not looking too bad. We've been pretty much sideways consolidating for the last 2-3 weeks at this point in time, but overall looking good. The daily might look a bit choppy, but it is indeed a nice bull flag. We're establishing some good support above a big area, guys, which is like the 137 line that the bulls just could not break through. Now we've broken above it, and we're kind of sitting down on top of it. So healthcare looks pretty good. In all reality, this is indeed a bull flag on the weekly timeframes, and you might just be looking for a bit of expansion. So healthcare is still a decent sector to be accumulating, whether you guys are choosing individual names or the sector. I still think that healthcare is fundamentally undervalued in relation to the rest of the market, and we're still trading very close to the infamous 50 monthly EMA, which has only really been tested about 3-4 times in the last 15 years, and has proven to be a good buying opportunity every time. I know it's not the fastest sector, but we could be seeing some very nice gains here, which is why I do have leap call options on healthcare. Not a very huge position for me, but I do still want to be playing this theme. Moving on to SMH right now. So semiconductors, not too bad, but we know that semiconductors have pretty much been doing a whole lot of nothing over the course of the past month and a half. Sure, we have some names breaking up to the upside, but other names have just been doing a whole lot of nothing, right? Some names that are breaking out, of course, we can talk about AVGO after their earnings, clear break of the highs, Micron as well, trying to break its own respective highs. But for every name like that, for every pair of names like that, you can still find some fairly beaten down stocks, right? Like ASML, fantastic company, kind of an inverse head and shoulders pattern right now, looking very good for ASML, but it's a bit of a longer term play, right? ASML doesn't necessarily move like Palantir. So some names are breaking out, some names are still left behind a little bit. It's up to you guys to find the key names. I've mentioned a few of them on the channel, but ASML is probably one of my favorite ones that is still kind of a bit lagging behind the rest of the market, at least one of the names with the highest competitive advantages in my opinion. So we'll keep an eye on this, guys. If you get a breakup here of about 301, it'll be finally a new daily uptrend and a resumption of the weekly uptrend higher. But pay special attention down here. 281 is the line in the sand. In the event that you lose that without setting new highs, you're going to have a little bit of a daily downtrend on your hands and maybe just a bit more weekly consolidation, which would be very healthy, especially when we zoom out to the monthly timeframes. You'd just really be looking for a higher low. So if we get a 6, 7, 8, 9% pullback in semiconductors, it wouldn't be surprising at this point in time. It would just be very natural monthly consolidation, whether you look at this one, whether you look at the SOX, all things point to the same thing. In the event that we break down below our most recent lows and go into some extended consolidation, it should be a buying the dip opportunity for a lot of our favorite companies out there that we cover on the channel, whether that is AMD, NVIDIA, TSM, Micron, a lot of the ones that stand to benefit the most from the AI push and from the data center ramp narrative. Moving on to the Russell now. The Russell only up about 0.2%, but still very decent day for the Russell. The Russell has responded very well to the premise of rate cuts at the moment, and the daily bulls keep on pushing. Beautiful daily uptrend. Higher lows are now still set at about 232, so any move lower looking for the higher low for possible further trend continuation. Now, if we go into a bit of extended consolidation around the highs right here, I want you guys to focus on the weekly time frames, because in my opinion, that's the most important one right now. You have a very nice weekly uptrend overall, and you'd just be looking for an infamous back test of prior support, 232 down about 225. The bulls are looking to kind of build some accumulation areas on this chart. This was a very big area that stopped out the bulls back in 2021, stopped us out again at the end of 2024. So if they start using this area, especially in tandem with rate cuts, it could be a nice area to build some positions on growth. I'm not looking for weekly call options, but possibly some leaps or possibly some shares or some exposure to small caps into the next few years could be a nice catch-up opportunity for the Russell, because we know this index hasn't done anything in the past 3-4 years, and the Russell, in the context of a bull market, is usually the last one to rally, and when it does rally, it tends to rally pretty hard. So keep all of that in mind. Taking a look at the VIX right now, the VIX doing absolutely nothing. The VIX is still in a good location right now to shop for leap call contracts on some names that have perhaps been left behind or some names that have been consolidating. When the VIX is low, usually you get the best options prices for buying options. And then of course, when we have some volatility to the upside, that's when you have the best opportunity to sell some options because the volatility premiums are very high. So right now, still a good condition to buy some options. I did add a couple more to my own portfolio, which I will show you at the end of the video. And whenever you have big spikes to the upside, that's usually when you guys see me fire off a ton of short put trades in the market. Taking a look at yields finally, guys. Finally, the 10-year has done something big. I was telling you guys to take a look at 4.2 on the 10-year. We finally cracked it to the downside. Beautiful weekly downtrend on yields has been started right now, and you might just be starting the monthly rollover, which we've been kind of scouting now for the past 7, 8, 9 months. It's finally here. And of course, that's because of the more accelerated rate path that people are predicting the Federal Reserve will embark into to kind of counter some of this labor market weakness. In terms of the 20-year yields, same concept. I was telling you guys to pay special attention to the break of the 4.7 support range, which has been support since pretty much the month of April, right? It's been a very long time, and now we're finally breaking down below it. Very nice weekly downtrend on the 20-year yields, and as well might just be starting the infamous monthly rollover of this chart. We'll pay special attention, which is why I've been saying the past few months have been a phenomenal opportunity to DCA and buy into TLT if bonds are your thing right now. The bond market reacting beautifully from the bottom, weekly uptrend, which is pretty much the inverse of the weekly downtrends that we saw on yields, looking quite good. So the next stop for TLT has to be up here. About $90 up to 93 is your first area of resistance. My target for this one, maybe over the next 6, 9+ months, is going to be all the way up here to the $100 range. That area was hit prior to the first rate cut in the month of September of 2024. So looking quite good. Any buys that were made down here are finally starting to get rewarded. So congratulations to all of you who are building some positions at the lows. Moving on to gold right now. Gold continues to be very, very strong. Yesterday, we concluded with a 1.4% day to the upside. The bulls just not slowing down at all, guys. Looking very strong. Clear daily uptrend breakout and clear weekly trend breakout as well. After consolidating in this nice bull flag range for a better part of the last 4-5 months almost, we rode the 12 EMA on the weekly, and now you got the big breakout. It's very tough to chase gold up here. Matter of fact, if we have any long swing trades that we've built at these support lows over the past few months. Decent area to think about maybe winding down some of the positions. Your daily overbought conditions right now on the weekly time frames, the MACD is curling up, so you can push a little bit higher, but this is when I kind of want to be scaling out of some positions, especially around these round psychological numbers 36, 37, 38, as we move into this nice leg of extension for gold. Moving on to our crypto names right now. So taking a look at Bitcoin real quick. Let me just check my thing in case, I hope the screen's not frozen. Okay, good. I only have one screen to work with right now, so I can't really pay attention to the video while I'm doing it. But the last thing I want, which is what happens sometimes, is the screen freezes up and I keep talking and then have to redo the entire video. Never fun. So Bitcoin, taking a look at Bitcoin right now. Bitcoin, I mean, not too bad, but we know it's still been a bit weak. The bulls are trying to go for the daily uptrend reversal trade. We know that it's been a daily downtrend now for a better part of the last 2 months, let's say. Now the bulls finally have a nice engulfing move. They're trying to reset the daily uptrend. So the first thing you should be able to ascertain from that is the higher time frames here, weekly downtrend. We came into a nice support area, 107 to 99. So when you start to see a push from the bulls to try and reverse the lower time frames, it should lead you to understand that we're trying to set the weekly higher lows, and you're trying to use this support area and get another push going back into the 118 area. So I've been a big fan of building some Bitcoin positions. You know, guys, that I've been building an MSTR position here towards the lows because the MNAV on MSTR is very cheap and it's kind of lagging behind its traditional performance in relation to the underlying asset, which is Bitcoin, of course. That being said, still a weekly downtrend. The bulls haven't shifted it around just yet, and we are still in the midst of very attractive monthly consolidation. So further pushes into our support range is a fantastic opportunity to be selling some puts and or accumulating some positions as the 12 EMA on the monthly curls higher. And we know Bitcoin has been using the heck out of this monthly 12 EMA for a better part of the last 2 years during this rally. So this, in my opinion, is still another beautiful opportunity to DCA for some longer term positions. Lastly, talking about Ethereum. Ethereum, man, where did the volatility go? It was super volatile this entire time and now nowhere to be seen, right? Just flattening out right here, getting super, super, super tight. Whenever you see these tightening ranges like this, guys, usually when it breaks in a big fashion. Which way it's going to break is obviously anybody's guess, but we do have some certain biases that we can kind of extrapolate from this chart. We know that the weekly bulls are in full control, so you would not be surprised if the break does come to the upside, especially if the markets still remain bullish. However, if that doesn't play out and we stay in this daily downtrend and the bears give us a big candle to the downside, well, you guys know exactly where we should be looking for some entries, right? 4,000 down to 3,700. It would be a very logical backtest of this beautiful area of weekly support and monthly support as well. It would just be a casual breakout retest trade on the monthly. So if we're looking to sell some put options, I would be looking to sell some put options down below there, right, on Ethereum. If you guys want to use SBET, if you guys want to use BMNR, some of the Ethereum treasuries, or you just want to use direct Ethereum assets such as ETHE or maybe ETHA, that is completely up to you. Just go with the most recent support areas on those charts. They'll probably line up perfectly with that 4,000 to 3,700 on Ethereum overall. So that's pretty much your entire market rundown. Hopefully you guys enjoyed. Now let's dive into some big tech names. So if we take a look here at Apple first, Apple down about 0.76% today, but not the worst day for Apple. The clearest time frame, in my opinion, is the weekly chart. We'll get to that in a little bit, but you can see the daily bulls, clear daily uptrend right here. And one level that we did just break through is this infamous area of resistance, which kind of held us back in the fall of 2024. It's been a big area of congestion for the bulls, but you can clearly see what's going on here. Beautiful weekly uptrend recaptured by the Apple bulls right now. So any pushes down back into it, 236 down to 227. Beautiful area for a bit of a back test trade. Apple is looking very strong leading into the next maybe 1 to 3 months type of thing to wrap up the year. And I'll remind you, Apple iPhone 17s, well, the data is going to be released soon, and it is looking quite good in terms of the benchmark comparisons to their 14, 15, 16 models. We have some clear upgrades on the camera aspect. We have some clear upgrades for RAM as well, and a complete design change. So I think people will finally be excited about this new Apple product, and that could be the one thing that lifts them a little bit higher. Apple year to date is still kind of lagging behind some of its sector peers. Let me just Go back and show you guys. Year to date, Apple is still down 5% when a lot of its big tech peers are deeply in the green right now. So Apple, still a fantastic trade. It's a little bit late in my humble opinion. I mean, we were talking about Apple a lot back here, and that's where most positions should be started. In the end, we pull back though. The one trade opportunity that I might be exploring is selling some short puts down here in the mid 220 region. Moving on to AMD right now. AMD down, or rather up, excuse me, about 0.18%. Sorry, red candle, but a green day. So that being said, daily downtrend on AMD is still quite prevalent right now. You're looking for a back test of the prior support area. It's much clearer on the weekly time frame. You're going for 148 all the way down to about 133. Beautiful weekly consolidation on this chart right now. It needed it, and now we're actually getting it. So looking not too bad right here. Hunting perpetually for the weekly higher lows, not too bad. Coming into the nice support range on the weekly and also the monthly time frame as well. It should be clear as day, right? Beautiful engulfing move by the monthly bulls. Looking for the back test. All the monthly EMAs are sitting right in that location. Not only the monthly EMAs, but several of the longer term weekly EMAs as well. It's been a really nice pullback so far on AMD, if I do admit myself. It's been about 20% from local highs, which is a dip that we do want to be buying. Why? Well, because the fundamental thesis on AMD has not changed at all. In around the 150 mark, you're currently trading at a 1.29 peg, which is very, very low, especially considering how fast the revenue and EPS growth are moving over the next few years. So that being said, I'm a big fan of selling some put options in this lower location down here, accumulating some more shares, and maybe even going for some leap call options. I'll show you guys what I have in my portfolio at the end of today's video. Moving on to Amazon right now. Amazon up 1.51% today, continuing its march higher. Amazon bulls really looking for more right now. Beautiful daily uptrend. Even if you get a pullback here, guys, you're looking for a daily higher low. Anything above 222, just looking for a very simple daily higher low. If you do make a push down into there, you'll probably find me selling some put options in around the mid 220 range. The weekly bulls are also in full control. They have now reset a nice, beautiful weekly uptrend. Well, we never lost it, right? It's just we didn't get smooth one-time continuation, right? We kind of did a little bit of a two-step process right here, but we set some fantastic support in the middle, or in the interim rather. 225 down to about 220 is going to be the big area of support. So if you see a bit of a pullback down into here, fantastic area to be reloading some swing trade longs, some shares for a long-term portfolio as well. And I will be a big fan of selling some put options down there in around 220. I mean, now it's not quite 10% higher, but slightly higher. It's about a 1.9 peg, about a high 30s price to earnings. So the valuation multiple is not as attractive as when I was telling people that I was buying Amazon shares down here. But Amazon, I still think, has a lot of catching up to do, guys. Over the past 5 years, Amazon is the slowest performer across all your big tech names. Only up 36%. I know it sounds like a lot over 5 years, but it really isn't, right? It's severely underperforming almost all of the big tech peers. I think Amazon has a lot of catching up to do, but all lines of business are still ramping really well, whether it's AWS, cloud computing, advertising, and so many different things for Amazon right now. So still one of my favorite names for a quote-unquote catch-up trade over the next 6, 9, 12, 18 months type of thing. Moving on to Google right now. Google, unfortunately, ending red. Started off the day very strong. Again, was up over 1%, sadly pulling back a little bit, but the Google bulls have tons of space to work with. We are just very overbought right now on the daily RSI. It's been such a huge push since the DOJ ruling came out just last week. Fantastic push by the bulls. You guys know what to expect, right? Any moves lower, looking for higher lows, anything above 207, looking for a higher low right now. Unfortunately, there's really not much to do on Google right now. We're very extended, whether you look at the daily timeframes, the weekly timeframes. So I'd be a big fan of possibly waiting for some pullbacks. If we get some very quick and sharp pullbacks, trying to go for a bit of the gap fill right here, maybe, just maybe, you might find me selling some short puts around 215, 210. But as of right now, no trade on Google for me. All of my trades were built, guys, at the lower levels, whether those are shares for the long-term portfolios, lead call contracts, and things of that nature. So right now, no short-term swing trades on Google for me. But is it a bad time to be adding some Google shares to your long-term portfolio, meaning something that you want to hold for the next 5, 10, 15 years? As a matter of fact, no. Even around the 225 range, Google is still fundamentally cheap. It's low 20s in terms of a forward price to earnings. It's a 1.56 peg, so still relatively cheap. Moving on to Meta right now. Meta down about 0.02%. Sadly, Meta as well was up almost 1% over the course of the day today, but just could not hold up the gain. So Meta bulls have been struggling a little bit recently. Daily downtrend, nice engulfing move. Now we have to convert into the new daily uptrend. So the line in the sand level still remains this guy right here at about 735. We have not lost it. That's the previous all-time highs twice and has been an area of recent support for the bulls. That being said, the clearest time frame of them all is the weekly. What the bulls are looking to do, guys, they're looking to protect this weekly uptrend that they've been in arguably since the lows of the month of April, looking for the newly established weekly higher low to be last week's low, 720-ish, and now looking for the continuation of the trend right now. Meta is not looking too bad. I do have a little swing trade on personally myself, looking for a recapture of the highs. Stop loss for me is currently going to be below last week's lows. So not all that bad on Meta. And in terms of the share price, around 750, 760, it's actually not too bad. It's under a 34 price to earnings. It is about a 2.25 PEG ratio, which is a little bit on the high end, but is quite manageable for Meta. Fantastic company, a lot of profits to be made on Meta in the future, in my opinion. And the growth in Meta is still very strong leading to the next few years. So also one of my favorite names leading into 2026 and 2027 as they really capitalize on their profitability and from certain aspects of the AI race as well. Moving on to Microsoft right now. Microsoft up 0.65%, but we know Microsoft had a big red day on the Friday session, 2.55%. The bulls were looking to get a new daily uptrend, and sadly the bears said no. So daily downtrend simply continues at this point. Clear as day, right? And now we're unfortunately under all of your major daily moving averages. So daily downtrend, you guys should immediately think to the higher time frames right away. And all you're looking for right now is just this continuous weekly consolidation. So we've been talking about this since the highs, right? If we lost the 12 EMA on the daily and the daily uptrend, we are going to weekly consolidation. And that's exactly what happens. And we have been into it right now for about the past 6 weeks. Nothing has changed fundamentally with Microsoft, guys. It's just Microsoft usually does not get that extended. It was like 3-4 months of upside consecutively in a row. And now the highest time frame right now, the monthly, is showing very healthy price action. In the event that I can find Microsoft back down here in like the 470 range, that's gonna be an area where I will want to possibly take some swing trades. It'll be lining up with the 12 EMA. And also lining up with some of your prior highs right there. So I'm looking for those back tests. If they don't come, no problem at all. I have tons of Microsoft shares that we accumulated all throughout last year at these support range lows. It's just still a little bit too high for me at the $500 range. The valuation really elevated compared to historical averages at the top end, as a matter of fact. Moving on to Netflix right now. Netflix, not looking too bad. Got to give it to them, right? The bulls played great defense here, 12.10 down to about 11.85. So now we're just looking for the continuation of the uptrend, consolidation a bit today, but the line in the sand still remains, line in the sand remains 11.85 to the downside. So you don't want to see them break that. They're not looking too bad right now. We do have a new weekly uptrend established by the bulls as well. So we're looking good. So the monthly has now consolidated, and the bulls might just be looking for a little bit more. Now, is Netflix a buy up here? Well, I keep saying this. It depends on your time horizon, right? We probably won't have the fast-paced rally that Netflix had from April through roughly June, July. However, we do still have some good long-term upside. The corporate executives at Netflix say that they're looking for a $1 trillion valuation on the stock by 2030, and they're going to do everything in their capacity to make that happen. Netflix right now trades in or around the $500 billion range. So you could be looking at a potential 2x over the next 5 years. I know it's not as fast as some people want, but Netflix is a very solid company. No red flags at all with this business. On to NVIDIA right now. NVIDIA up 0.77%. They were actually up closer to about 1.5 today, but we know that the daily bears are still in control of this chart right now. Clear daily downtrend and into support, which is 171 down to 165. Now, the clearest time frame, if you're looking for when this one's going to stop, well, you have to wait for the bulls to put in a new daily uptrend, kind of like Netflix did, right? That being said, it is still just very healthy weekly consolidation right now for the NVIDIA bulls. So what we're looking for here, guys, on any further breakdown is going to be some fantastic opportunities to add to some shares and or sell some put options down here. I've been having a lot of fun selling some put options on NVIDIA over the course of the past 2 weeks. I'm using the 2x leverage ticker, NVDL, and currently targeting the lower 70s location and possibly under 70. Call it like 73 down to 67 is my sweet spot, which would kind of be synonymous with finding NVIDIA down here in like the 155, 150 location, which is closer to the bottom end of the larger range of support, which starts down there. And you'd just be looking for a nice consolidation leg here on NVIDIA, looking for monthly higher lows, kind of similar to what Microsoft is doing right now. In around 170, the valuation is not too bad. At a forward 2025 price to earnings of 39.3 and a PEG of 1.71, the forward 2026 price to earnings is like mid-20s. So NVIDIA right now, it's really not that expensive, which is why I'm a big fan of playing these pullbacks on this stock. Moving into Tesla right now, so Tesla down about 1.27%. The bulls trying to challenge the area of resistance again, 360 down to 340. We know it's been very, very choppy for the Tesla bulls here over the course of the most recent few weeks. If you get rejected again without breaking through, looking for a new higher low. You can't lose the higher lows, guys. As long as you just maintain the higher highs, higher lows sequence right here, you will eventually be looking for that resistance break. I'm not playing Tesla here. I'd be a bigger fan of waiting for the following trade. Give me the breakout, test like 390 resistance, and then give me the back test. I want them to break out and back test this location, which the bulls have struggled with since the month of May. If you claim the area, you prove to me, all right, we're looking for more. I can play a back test, put a stop loss possibly under support, and then go for the next expansion leg on Tesla. But as of right now, no swing trades for me, but the chart does not look bad. So we'll see if the bulls are able to finally smash through that resistance range. Tesla also responding well to the premise of rate cuts, of course, as would any auto manufacturer. Moving on to Palantir right now. Palantir up 2%, but it doesn't really look like much because the chart has basically been doing a whole lot of nothing for the past 3 weeks at this point, right? Ever since the growth scare that came into some of these AI names a few weeks ago, Palantir's just not been able to recover much. We're still trapped in a range, guys. 163 to the upside and to the downside, like 148. Very tight range. Very, very, very tight range. So we'll see which way this one has to break. Obviously, break to the upside, new daily uptrend, and you're looking for the sequence to reset. And if you break to the downside, there is some short-term support down here, 148 to 139. My favorite way of playing Palantir right now is on any sharp and fast declines, we can find some phenomenal short put options down here into the 130s. Why the 130s? Well, just because it represents a larger area here of weekly support, in my humble opinion. I mean, this is like a temporary zone, but it's not the strongest area, let's be honest, right? And the 130s also kind of lines up with a monthly higher low sequence that we'd be looking for, and lines up with the 12 EMA on the higher time frame, something that Palantir has tested quite a few times throughout this historic rally overall. So that's why whenever you get some sharp declines on a one-day basis, I'm looking for some short puts down here. I would not mind picking up some Palantir shares down there, even if it's still very, very expensive overall. At least I'm waiting for some better discounts. But congratulations to all Palantir bulls. You guys are holding up quite nicely, and I still have some Palantir shares as well. Moving on to SOFI right now. SOFI, very solid price action, guys. Pay special attention to how they react every time now. From $24.30 down to about $22.30 overall. This $2 range. It's a very big area because this was the highs back in 2021. And now it took us a while, right? It took us several weeks to kind of build up some momentum and finally break through this one. So it's going to be probably challenging for the bears to get through to the downside. Very big level, right? This was a downtrend into support, and I was saying whenever we come into here, try, if you want, to play some short puts at the lower end, 23 down to 22. We've been doing that a few times over the most recent couple weeks, and it has been doing fairly well for us. And also, decent little reload area for some longs. So hopefully you guys are able to get one of those two positions, either some short puts or some back tests for some more swing trade longs. SOFI right now is looking very good. We'll see. It's looking primed for a continuation of the breakout. All right, if you take a look at the weekly chart, the monthly chart is still looking very strong right now. And the fundamental valuation of SOFI is not all that bad. Around $25, it's still trading about a 9 forward price to sales and a 1.61 peg. Not very bad metrics at all, to say the least. Moving on to Uber right now, before last. So Uber up about 3.7%. Beautiful reaction by the bulls right here. And they're defending this area quite nicely. Talking about 93.40 down about 90.2. The short-term price action is somewhat choppy on Uber, and it has been choppy for about the last 2 months, let's call it. The clearer time frames, in my opinion, are the weekly and monthly charts. Beautiful weekly uptrend has just been maintained by the bulls. Weekly higher lows have been set, and you can see we've just been grinding this 12 EMA, right? Some pops below it, but for the most part, just grinding higher. Not looking too bad. No swing trades for me on Uber right now, but I am holding every single one of my shares because right now Uber, even at the lower $90 range, still a very decent valuation, whether you look at it on a forward PEG ratio or a free cash flow yield, very decent, and the growth for Uber is still very, very strong leading into the next few years. And there will still be a push and pull between Uber and some of the pure play robotics, like the robotaxi names and stuff like that. But I think there's going to be a synergy between the two. Uber will be able to leverage its network effects. It already has several partnerships with some of the robotaxi companies all across the globe, not only in North America. So before we see the downfall of Uber, guys, it's probably going to be a very long time. They'll probably leverage their relationships and also make the most of this AI trade as well for robo-taxis being integrated into their networks. Moving on to TSM right now. TSM, strong push right now on TSM, guys. 1.55, they're going for the range high break. Looking very good. The daily bulls are back in control of this chart. Looking very strong, if I have to admit. On TSM, we had weekly consolidation, guys, for like 5-6 weeks. And it was a pretty good opportunity to be adding some TSM shares to our long-term portfolios because we knew that in around 230, 220, the valuation was really supportive of wanting to add some shares. Lower 20 multiples, a 1.4 PEG, fantastic growth still over the next 2-3 years, and the demand reiterated over the last earnings call to be excessively strong, guys, through the end of this year and 2026 as well. So in the event that you get the break and close this week above here, well, your weekly uptrend just resumes course, and the monthly looking very strong after some slight consolidation on the monthly timeframes, establishing the higher lows and probably going for it. I would not be surprised, guys, if over the next 6 to 9 months, you're looking at maybe TSM being a close to $300 stock. The valuation expansion definitely would support that overall. And that is everything that I had for you guys today for the market rundown. Hopefully you guys enjoyed that. Now let's dive into some the biggest gainers and losers of the day. Sorry about that. So we'll be going through some of these a little bit quickly, just because I don't have the most amount of time today. By the way, sorry about the late upload, guys. I wake up at like 7:30 to film these videos, and it takes about, an hour to film and then another 20 minutes to upload because hotel Wi-Fi is obviously not as fast as my Wi-Fi back home. So I'll be putting out the videos around like 9-10 p.m. while I'm traveling in Asia because of the time difference. That being said, in terms of our names that were down the most today, Open Door. So after a massive squeeze, Open Door just looking for some consolidation. Any consolidation, in my opinion, is a great opportunity to sell some puts under the market or maybe to reload some swing trades overall, but only put the amount of money you are willing to lose in Open Door. I would not be surprised if this stock can push higher, all the way up to 10 and maybe even more. But you got to play this one kind of level to level and don't get too greedy, right? If you see some massive profits really quickly, you can wind down some contracts, wait for a bit of a dip, and maybe kind of load up some more contracts, which is how I've been kind of playing each one of these swings. So if you get a swing back down here into the low 5s, this is probably the next area that I might be interested to play this one again. Talking about CLH right now, CLH has been doing amazing. Of course, their distribution deal with Pepsi, and of course, Pepsi giving them the opportunity to kind of handle the Rockstar brand, which is going to be very solid. Clear weekly uptrend, just looking for a back test of support down here. 51 down to about 46. So for anybody interested in playing CELH, I would be very interested down here in this lower location at around 55 bucks. Where we did the analysis after earnings, the stock was getting a little bit expensive on a price to earnings and on a PEG ratio basis. Not so much on price to sales, but to say that this one is cheap right now would be a bit of a mistake, right? It is trading on, closer to the rich side of things. So it's not the best deal, but beautiful price action for a bit of a back test. So selling some puts down here or maybe reloading some small swing trade longs, not the worst opportunity. Figma, we covered their earnings just about a week and a half ago at this point in time. I'm a big fan of maybe buying some of this company into the low to mid 40s. So I'll be looking maybe for some short puts. 40 bucks is probably the location that I want on Figma, just because of this valuation right here. Take a screenshot or you guys can go back on the channel. I covered their earnings pretty much just last week. On to bullish right now, kind of the same thing as Figma. Very, very high valuation for what it is, right? The valuation is coming down a little bit more now, only about 7.5 billion. Where I would be interested in this stock would probably be under 40. So as of right now, no action from me on bullish. Moving on to Reddit. Reddit was down about 4% today, but the bulls are looking very strong. I mean, we're getting a little bit tired maybe at the tops right here. Perfectly normal. No big news on Reddit today. If we do go into some extended consolidation, something like this, you might find me trying to play closer to the 200 level and just looking for a bit of a a monthly higher low, right? So the price action on Reddit still somewhat unclear just because we have not established much in the ways of support up here. But if I had to derive some location of potential interest, probably closer to the 200 metric right there. We cover them after earnings in around 200. It's not that bad. The price to earnings multiple is very high, but the PEG is somewhat manageable around 2. It's not my favorite company to play right now just because I don't think we're going to have this speed of growth anymore in Reddit's share price. So I'm kind of holding back, but one way that I will want to play this one is if we get some fast, sharp pullbacks on Reddit, it opens up the door to sell some puts far, far, far under the market. My true desired location is 180. I'm not saying it's going to go back there, but if you get a quick snapback into like the lower 200s, maybe, just maybe, you'll be able to find some juicy short puts down there, but no swing trades from me either with calls or shares right now. And then of course we talked earlier about the Elon Musk, SpaceX spending $17 billion to acquire the Spectrum licenses, which brought T-Mobile down. I'm not a big fan of playing the communications companies, but just a short-term price action right here. Support 242, down about 232. No swing trades from me right now on T-Mobile. And the same thing for ASTS. I mean, we talked about ASTS a few times, and I was telling you guys, watch for the pullbacks back down to the mid to low 30s, looking for monthly higher lows. So I know some of you guys don't care about this news headline. You guys still think that ASTS will be able to carve away its portion of the business. The head and shoulders on this chart was very clear, and it just took one news catalyst to kind of fulfill the prophecy of the head and shoulders. 35 down to about 31, not a bad area to possibly test for some swing trade longs and or selling some put options under the market on big red days like today. Could be a juicy proposition if this is a stock that you like, of course, as well. So that's pretty much everything for some of your biggest red names on the day. And we could talk about Chipotle. Chipotle, guys, I had a lot of questions today in my Discord about Chipotle, and the answer is no, I'm not really interested. We're paying pretty much tech multiples for a fast food company right now with slowing same-store sales. So Chipotle, unfortunately, I mean, just think of this as what it was back here, 2020 through about 2022, 2023. You guys remember every time you would go into Chipotle, it would just be packed. There would be so many people, and it's all people would talk about in pop culture and the media and stuff like that. It hasn't really been the same over the course of the past year, has it? So Chipotle kind of slowing down, which is why if I'm going to play a company that's slowing down from both the, let's call it the quantitative highs in terms of growth of same-store sales, but also qualitative highs in terms of sentiment around the brand, in terms of popularity around the brand, well, I'm going to have to get a cheaper multiple than this. I'm currently paying a 2 peg for a fast food company, which is a bit too high in my humble opinion. So for that reason, I'm not really playing Chipotle, but that being said, it is coming into support 40 down to roughly 35. I mean, we could talk about Pepsi as well. Pepsi is a phenomenal company, by the way. Any retests of Pepsi down here, like lower 130s, I'll do the same thing that I was doing when it was back there in the low 130s. I'll be playing short puts under the market. Fantastic company, and possibly setting up the infamous inverse head and shoulders. It's testing the lower bound of support right now, 140. If you get a breakdown below, good opportunity to be selling some puts or maybe acquiring some shares. If you guys are looking for some defensive or value-oriented plays in your portfolio, it pays close to like a 4% dividend, and they have largely gotten through a lot of the problems that they were having, which resulted in the stock price really collapsing down here. They've resorted to more promotional endeavors and have done a lot of cost cutting in that process as well. We covered their earnings on the channel July 17th, and it did show that they were doing the best they could given the tough macro circumstances. And lastly, the last one I'll do on the red list, guys, is Melli. Mercado Libre, I mean, fantastic company, but just has not been doing anything since the month of May, which is great for us to be accumulating some shares for the long-term portfolios. If you guys have Mercado Libre, still one of my favorite growth stories outside of North America. Take a look at these multiples right now, 1.34 peg, decent price to sales metric overall. Look at this revenue and EPS growth expansion too. fantastic expansion for the company. And just because it's a high share price doesn't mean that the company's done growing. Look at the analyst price targets on Mercado Libre. That's number one, but look what they're doing with EPS, guys, right? From last year to 2028, it's ridiculous. 3x on EPS, which is going to be nuts. And look at the revenues as well, from 20 billion last year all the way up to 51 billion in 2028. A lot of growth left ahead for this company, and we aren't paying too much for that growth either. As a result, still a big fan of adding Mercado Libre shares whenever I can from here all the way down to the lower 2100s. I think it's a gift if the market keeps this one down for an extended period of time for us. Now, to the upside, well, of course, we're going to talk about Robinhood. Some other news that we didn't cover was on Friday, because I didn't see you guys. I was traveling at that point in the plane. Robinhood getting added to the S&P 500. And they really needed that news because Robinhood's chart, let's be honest, wasn't looking the greatest, right? It was a daily downtrend. We'd been losing some of the longer term moving averages on the daily. And also, we're testing the weekly 12 EMA at the same time, with a big bearish engulfing move right there. The rollover, and with the MACD, the rollover was almost guaranteed. The S&P 500 news really saving them. That being said, Robinhood right now still trades at extremely high multiples. You're paying 81 forward price to earnings. You're paying a 5.6 peg, which is very expensive. I mean, it's kind of like Palantir, but they don't have the revolutionary tech that Palantir has. It's literally just a brokerage. I know some people don't want to hear that. Sure, they're growing their client base really well. That's for sure, right? Currently, right now, Robinhood is a $104 billion company. So the only reason why I'm not a big fan of buying this one here, I mean, if you have shares from back here, it's fine. There really isn't a reason to sell because they are still growing really well. But my problem with this stock is that, especially a lot of YouTubers talk about this one nonstop, right? Is people buy this one with the expectations that they're going to have the same growth and speed of growth as people who bought back there did, right? It's just probably not going to happen, guys. It's going to be tough for this company to, 2x, 3x in like 2-3 months. It's just not going to happen, especially not at these valuations. Very high price to sales. I mean, this one is like trading 2.5 times the valuation of SOFI right now on a price to sales forward metric. So if I had to pick between Robinhood and SOFI, I think the clearest bet is probably SOFI at this point. I know they're not exactly the same companies, but they are both fintech players and do have a brokerage arm to them. So Robinhood, fantastic company. It's just I'm not willing to pay this share price for the company, but congratulations to all current Robinhood shareholders. We can also talk about AAPL. AAPL also got added to the S&P 500. Now this one is different, right? Even though this one is also near the all-time highs, we were noticing at the 435 range the last time we did this analysis, kind of like after earnings. Was a phenomenal trade for a couple of key reasons. It was a beautiful breakout retest trade, number one, but also the valuation was relatively cheap. We were only paying a 1.3 peg at that time, right? Not too bad. And right now at about 550, that's when we kind of have to draw the line, right? So it is a bit expensive at the current time. So not for me. I will not be buying this rally extended on the daily timeframes, extended on the weekly timeframes, but maybe, just maybe, if we get a retest down here like 480, 475, maybe I'll go for a swing trade with shares or something like that, but you're going to have to show me a bit more consolidation. I'm not a big fan of buying after the rallies like this. A couple more that we can take a look at here, guys. Of course, we're going to talk about one that is not on this list right now because the move happened in the extended hours, and that's going to be NBIS. So NBIS coming out with, a huge piece of news after the close today, 17.4 billion with possible upside all the way up to 19.4 billion for additional services. Now, this is a huge deal for NBIS, guys. I mean, the market cap of this company is only $15 billion, right? So that's going to add a tremendous amount of sales to Nebius Group's forward pipeline. And right now, the stock is currently trading in the after hours in around the $92 range. So it's going to be very tough, guys, to buy that pump on the stock. And unfortunately, it's not the same stock as it was back here, right? Unfortunately, they were in Russia and they kind of delisted. The only relevant price action is pretty much since this year. So you kind of have to forget all of this. However, if you somehow see, because the stock price is going to be all the way up here, right? If you see a bit of a push down, not a bad opportunity to be selling some put options on Nebius Group. Call it like 75 or under, right? I'm not going to chase it at $90. Congratulations to everybody who has been in this one. We were saying it was a good buy back here in the 40s, 50s. We covered it after earnings. I was saying I'm a big fan of playing the pullbacks for any further shares or short puts in around the 60 range. A few times we were able to play those as well, and now we finally get the breakout. So congratulations to all Nebius shareholders out there, but really tough for me to buy post-rally on that one. one. We could talk about CoreWeave as well. CoreWeave was up about 5% on the day, another 5% in the after hours. We will see, can they take out 103? You really need to take out 103, guys. No new lows. And now take out 103. That is your first, right, daily uptrend in a while. And that would possibly be synonymous to setting some weekly lows right now. A lot of short interest on this stock. I think the short interest, the last time I checked, was like 25%. So weekly downtrend is clear. The first step to reversing this is, number one, give me the daily uptrend. And then try and break above this infamous area of resistance, which ends at about 110. If we can get a nice little push going on CoreWeave and reset the timeframes right here, it might lead to some further expansion. But I think the deal with Nebius clearly shows, guys, that Microsoft is shopping around for compute power. They already are CoreWeave's biggest client to begin with. So it just goes to show, some of these plays like CoreWeave, some plays like IRN, some plays like NBIS, they're probably going to be very popular into the next 6, 9, 12 months. I know CoreWeave's chart doesn't show that right now. They are up another 5% in the after hours. I'm a fan of playing CoreWeave right now because I think it's pretty oversold. There's a lot of short interest, a lot of short-term negative sentiment, but the long-term thesis for the company is clear. And additionally, it will be benefiting from the rate cuts because everybody talks about its debt. There's only about 5-6 billion of short-term debt outstanding for the next 12 to 18 months. They'll be able to refinance that at lower rates and push it out to 2029, 2030 when they have a lot more revenue coming in. Shout out to Oscar Health, man. We kind of bought some calls on Oscar Health down here at like 15, and it's just been rallying ever since. So looking very good. I mean, to make the argument, right, are you late? You are late on Oscar Health, let's be honest. Can we possibly push into the mid-20s? Yeah, we'll be testing the top end of the resistance range up here. Not a bad proposition for this company at all. It is right now for me a hold. Any pullbacks will be a nice opportunity for some short puts under the market. We were playing the heck out of short puts for like 2 months. Every single week back here, and we also loaded up some calls, and now we're doing quite well on those. BMNR for me down here is indeed a buy, high to low 30s, a nice accumulation zone for Tom Lee's Ethereum treasury play. He's trying to seek, or he's seeking to acquire about 5% of all Ethereum. So, he does buy more almost every single week or every 2 weeks. And just this weekend, he did put out a memo that they were buying more as well. It's trading right around the MNAV for the company. And not too, not too bad of a pullback right now either. So short puts under or accumulating some shares, very decent play overall. And I think that's pretty much everything, guys. I mean, shout out to New Holdings. New Holdings, you guys know me. Any pullbacks, phenomenal trade to be adding to some New Holdings. I mean, I was talking about it often before earnings and then after earnings as well, saying it was a buy. If we get a pullback here into support, right, into 14, might just be one of the last times that we can buy it. It is trading relatively cheap in relation to its forward projected price target, so please keep that in mind. And now lastly, maybe Elf Beauty, I guess, right? Elf Beauty, nice little push right here, beautiful push right there, weekly downtrend, oops, engulfing move. Now, this is monthly leg number 2. We were talking about this on the monthly, saying it was clear as day what was happening right here. Look at the monthly MACD, right? That cannot be ignored, guys. It's the monthly MACD cross. This is like a year plus in the making, looking very strong on Elf Beauty. So congratulations to all Elf Beauty shareholders out there. I think they have a very, very attractive road to recovery on the horizon. And look at this. That's a big one. A very big one, right? So next stop on Elf Beauty, if we can crack 140, it's gonna be 155 to 160. I mean, you're not early on Elf Beauty, but you're also not late. You can't call yourself early, you can't call yourself late. You're not getting a terrible valuation. Keep in mind, this company is currently trading for about $7.8 billion. I would not be surprised to see Elf Beauty trading by 2027, 2028, around the $15 billion range. So about a 2x, and I think I'm being somewhat conservative on my targets, meaning over the next year and a half, 2 years type of thing, I could see a 2x in the stock price from here. But we were playing Elf Beauty a whole lot down here, and that was the last time to add some shares. Now it's just a question of riding overall. So that's pretty much everything I had for you guys for the market rundown. Hopefully you enjoyed. We'll do more of those plays tomorrow. Now, if we wanted to cover some of the portfolio trades real quick, we'll take a look and I'll show you guys what we did last week, just to give you guys an update because I didn't do it on Friday. So last week we had some very decent wheel trades. As you can see, I labeled them closed early. I closed a lot of these on Thursday because I wasn't here for Friday. I was basically flying all day for the non-farm payrolls event. And as a result, I just wanted to close plays early and not have to worry about them into that one-day event because it could have gone either way, especially with that negative jobs report. So all of these wheel trades were nice winners. We closed them early. We had some rolls on CoreWeave. We rolled CoreWeave CoreWeave down to about the 98 covered calls, down from 101. We're still profitable on this position. We got assigned this one a while back, like on August 22nd. We've rolled it down a few times in terms of the initial short puts from 110 to 101, and now we're playing a bit of defense with the covered calls. Our average cost is 94.9. So if I get called away at 98, still not too bad ROI. It'll be like 3.5% over the course of the past like 3 weeks or so, which is not that bad, above our minimums. We'll see what happens on CoreWeave overall. And as well, in terms of last week, we got called away on Open Door. We actually got called away at $4 on some swing trades that we had for some shares that we were assigned prior. Cost on that was $1.72, so we made a little 2x on a batch of 100 shares, which is not too bad, not the hugest trade, but obviously you can scale up and down depending on the size of your portfolio. In my bigger account, I had more than that, and some people in our Discord, and I know some of you guys had way more than that as well. So congratulations if you were playing the swing trades on Open Door with us. We probably did quite well. In terms of directional trades that we closed last week, well, we closed the Apple Leap call options that we had, the 220 calls for June 2026. It came right into our 240 target, and as a result, we closed. So we had a 68% ROI showing on that one, made about $1,500 per contract, which was very strong. I also wound down a lot of swing trades that I held since the month of June that just hadn't been doing too much. We wound down ASML, CRM, Adobe, and PayPal and Airbnb were new ones that we got about 3 weeks ago, but they just didn't quite move towards the target in the speed that I was looking for them to. So what I chose to do into the Friday session, because I wasn't going to be there, and into also September seasonality, knowing that it's choppy, I took my short-term call debit spreads off the table, many of which resulted in a loss. But as I said, ASML, CRM, and Adobe, we've been holding those since June. They hadn't really done anything. We only have about a month of time left on this one. So I chose to do a couple things with the money that I was able to salvage from here and the Apple profits. We rolled them into brand new trades, which I'll show you in about a minute. Just before I do that though, 2 little lottery trades, BMNR and MSTX. I like to play some short puts on these, and those are wins as well. So beautiful week for selling puts. We had a couple very nice wins, like the Open Door win called away, the beautiful Apple win. We had some short-term losses right here, but it's fine. Most of all those are made up for with just the weekly wheel stuff, the Open Door stuff, and also of course, the Apple leaps. And what I chose to do with this money from Apple and the rest is I chose to DCA one contract that I have, but open a brand new contract on something else. So I'll show you guys in terms of what we're looking at here in the portfolio for the positions. So you'll see that a lot of these positions are the same. Now, one thing that I chose to add to on Friday, which was a very good time to be adding for, rather on Thursday, was TLT. You might remember I've been in this one for a while, arguably for the last 6-7 months in these leaps. We had an initial cost basis of like $13.40. I bought a leap call for about $9.40, $9.50 on Thursday in anticipation of the rate cuts narrative on Friday for any unfavorable jobs numbers. As a result, this one was a very decent buy. The TLT leap calls, January 2027, $80 calls, are now up to about $11.40. So we're up like $2 on the contracts we bought on Friday. Our average price across 2 contracts now, we're almost back to break even. And it's still very early in this trade. Additionally, what I chose to buy with some of that capital from Apple and the other trades that were wound down was an AMD leap position. Now this one is down a bit. 10%, especially because of the Friday price action. I bought this one on Thursday. I would have loved to wait until Friday for the market weakness, but it could have gone either way. I loaded it up on the Thursday session, and I will be DCAing into this one. If I can find it like low 140s or maybe into the 130s, I'll be throwing one more contract. This is December 2027 leap call debit spread, 165 versus the 300s for about $3,000. I'll be adding one more of this one, and that's going to be it for me. I'll be riding AMD into the possible $300 price target, and I'm giving myself 2.5 years to do that. Other than that, everything else stays the same. We still have our other elite call options here, the smaller ones. K-Web, which is doing nicely right now. We're up 48% on those. The Oscar Health, which we're up 64% on. Sentinel One, we're up 25% on those. TLT still down. XLV Healthcare, we're still up about 18%, but we've got a lot of time on these Jan 2027 130 calls. Still enjoy that trade a lot. In terms of these short put trades that we have on for this week, you might notice a lot of the ones that were in the top 5 options video yesterday. We have the AMD 142s, they're currently 50% profitable. The BITX 47s, those are 68% profitable. CoreWeave We talked about that roll already. NVDL, 67 put, 65% profitable. Sentinel-1, 73% profitable. And now a new one, USAR, 12.5s. So all of these were taken last week in anticipation of the Friday data. Some of these guys I took on limit orders. Before getting into my flight Friday, I just put in some limit orders on some strike prices that I enjoyed. I didn't get the high of the day on a lot of these contracts, but I got exactly the strike and the price that I wanted to. I had other contracts that did not fill that day, but I'm happy to get, I was happy to get some that did fill. So we're looking pretty good on the wheel trades this week. And obviously the longer dated leaps, the bigger ones, we've talked about them many times so far. AMD, our newest position. Amazon leaps are up about 50% right now. Still a lot of time, December 2027. CoreWeave, we talked about it. I also have a leap debit spread on this one. We're down about 8%, but I also still have 2 years of time on this one. 135 versus a 280 bull call debit spread. Fantastic ROI profile on that one. And then we also have some Googles. Right, the Google trades right now, the Google leaps are up 106%. The Meta is the last short-term swing trade that I have in this account for some shorter dated bull call debit spreads. These are for October. And then we have the Micron trade, which is up 170% on the leaps, and NVIDIA as well. Excuse me, I have Meta and NVIDIA. NVIDIA, the only little short-term call debit spread that I have right now. It's still down because we took this one. This was an earnings trade, quite simply. We took it before earnings, going for the breakout. It didn't happen, so I'll just keep it in the account. Very small positions, but as you can see overall, now we just have a lot of long-dated leaps with a ton of time on them and just running the wheel strategy on a lot of stuff, and we're only assigned CoreWeave so far. So not too bad. The account's looking pretty good, and we have a lot of buying power into the rest of the week. That being said, that's everything I had for you guys today. If you guys enjoyed, well, consider dropping a like on today's video. Would appreciate it for the growth of the channel. Consider subscribing if you're new. We do these every Monday to Friday after the close. Although during my travels for the next 4 or 5 weeks, I'll be doing them Monday to Thursday. Friday and Saturday are kind of going to be my days to enjoy the holidays. And last but not least, if you have any questions, please feel free to leave them down below in the comment section. I would be glad to answer and help you guys out as best as I can. And lastly, if you guys wanted access to a trading community of over 200 members where we trade and invest in the markets every day and have a lot of fun in the process, you might consider joining our community as well. The link to the Discord is down below in the video description. And of course, you get access to a ton of things. Well, number one, you get access to all of my trades, right? All of these trades in real time, whether it's the wheel trades, whether it's the directional trades. I know you see a lot of losses here. These are some losses that we just held since June. Not the biggest losses, but they were made up for largely by other plays, right? And you get access to the leap call options as soon as I do them as well. But you can see here, right? Several gains locked in. So many directional trade wins. I'll go through the trades over the last 2-3 months. The green little check marks are wins. The red circles are losses. I'm very transparent with either or all the time. You can see one far outweighs the other, but I obviously can't guarantee or promise anything, right? But we do trade fairly consistently in the Discord. You get access to all these trades, all the types of trades in real time. You get access as well to our private morning live streams that I do Monday to Friday before the open. I stream live for 2 to 3 hours. I trade live, and then I also take all your questions in terms of your stocks, your options, your long-term portfolios. If you're not there, they're recorded. You can also ask me all your questions in our chat rooms throughout the day, and I'm very fast to answer even when I'm traveling. And last but not least, guys, you get access to our private video educational section where I go over all the option strategies that I use, how to do leaps, how to do call debit spreads, credit spreads, and different variants of the wheel strategy that I don't share on YouTube. I also show you guys how to do technical analysis, fundamental analysis, how to build long-term portfolios, and so many other educational videos in that segment that our members enjoy a lot. And lastly, you get access to all my charts. Whenever you see charts like this, support resistance levels on the charts, and the earnings presentations like this, you can just copy paste everything. You can copy paste all my watch lists, all my charts. It takes 10-15 seconds, over 200 different companies that I annotate with support and resistance. So in the event you didn't want to do it yourself and you just wanted to copy mine, our Discord members can do that too. That is everything I had for you guys today. In the event that you wanted to join, hopefully I see you guys in there soon. The link to the Discord is down below. Come join us. You'll have a lot of fun, and we make some decent profits along the way. And if not, I'll see you guys right back here on the channel. So take care. That's it for me. Have a great rest of your evening. Peace.